Pioneers. Imagine if the CEO of Bank of America were to make a groundbreaking announcement about integrating cryptocurrency payments. This could be a game changer for Pi Network. Such a move would signal major adoption by traditional financial institutions, opening new doors for digital currencies like Pi. Could this be the moment Pi finally secures its place among the top cryptocurrencies? Would this announcement trigger a surge in demand, driving Pi to new all-time highs? And what would this mean for the future of decentralized finance? Let's dive deep into the possibilities and explore how this could reshape the landscape for Pi Network and the entire crypto industry. Bank of America signals crypto adoption. What this means for Pi Network. The financial industry is on the verge of a massive transformation. The CEO of Bank of America has just signaled that the U.S. banking industry is shifting towards cryptocurrency for payments. With a total asset value of $1.6 trillion, this move could mark a major milestone in global finance. For years, major banks have been hesitant to fully embrace crypto due to concerns over volatility, regulations, and security risks. But things are changing. With increasing consumer demand, blockchain efficiency, and regulatory clarity, institutions are now warming up to the idea. And if banks start supporting digital assets, Pi Network could be one of the biggest beneficiaries. Why this could be huge for Pi Network. Pi Network is designed as a decentralized digital currency that allows users to mine directly from their mobile phones. Unlike Bitcoin, which requires expensive mining equipment, Pi Network has positioned itself as an accessible and inclusive financial ecosystem. If Bank of America, and potentially other financial institutions, embrace crypto payments, it could open doors for Pi Network's adoption in mainstream finance. Let's look at some key factors that could impact Pi's future price. Legitimacy and institutional adoption. If major banks start incorporating cryptocurrency payments, it would mark a significant step toward mainstream acceptance of digital assets like Pi. Traditional financial institutions embracing crypto would not only validate its legitimacy but also encourage wider adoption among businesses and consumers. This could help shift public perception, positioning Pi as a trustworthy and valuable digital currency rather than just an experimental project. Furthermore, with increased legitimacy, businesses and merchants may be more willing to accept Pi as a viable means of payment. This would enhance its real-world utility, allowing users to purchase goods and services directly with Pi, rather than relying solely on peer-to-peer transactions. As more companies integrate Pi into their payment systems, its demand and circulation could grow, further solidifying its place in the evolving financial ecosystem. New financial services for crypto holders. As major banks explore cryptocurrency integration, they may introduce a range of financial services tailored for crypto holders. These could include crypto-based savings accounts, lending options, and investment opportunities, similar to traditional banking services but optimized for digital assets. Such offerings would provide users with more flexibility in managing their crypto wealth, allowing them to earn interest on their holdings, take out loans using Pi as collateral, or even participate in investment funds centered around blockchain technology. If banks were to support Pi Network tokens, Pi, within these services, it could significantly enhance their usability in everyday life. People might be able to use Pi for routine transactions like shopping at retail stores, paying utility bills, or even making mortgage payments. Additionally, integrating Pi into financial products could attract more institutional and retail investors, further boosting its value and adoption. As the financial sector continues to evolve, such developments could position Pi as a key player in the digital economy. Increased demand leading to scarcity. As mass adoption of Pi Network gains momentum, the demand for Pi tokens is likely to surge. With more individuals, businesses, and institutions recognizing its value and integrating it into their financial activities, Pi could become a sought-after digital asset. This heightened demand could have a direct impact on its price, potentially driving it higher as more people seek to acquire and use Pi for everyday transactions, investments, and savings. Furthermore, as Pi becomes more widely accepted, its circulating supply may become increasingly limited. Many users may choose to hold onto their Pi tokens for long-term value appreciation, further reducing the available supply in the market. If businesses and merchants begin accepting Pi as a legitimate payment method, the transactional volume will rise, creating a natural cycle of demand and scarcity. This scarcity, combined with growing adoption, could lead to significant upward pressure on Pi's value, reinforcing its potential as a viable digital currency in the evolving financial landscape. Competition with central bank digital currencies, CBDCs. As governments around the world explore and develop central bank digital currencies, CBDCs, the competition between decentralized cryptocurrencies like Pi Network and these state-backed digital assets is expected to intensify. CBDCs are being introduced as a way for governments to maintain control over digital transactions, improve financial inclusion, and provide a regulated alternative to private cryptocurrencies. However, unlike decentralized assets, CBDCs are issued and controlled by central authorities, which may limit user privacy and financial autonomy. If Pi Network gains significant traction before CBDCs become widely adopted and dominant, it could establish itself as a major player in global finance. By leveraging its decentralized nature, community-driven ecosystem, and growing user base, Pi could offer a compelling alternative to government-backed digital currencies. In an increasingly digital economy, early adoption and widespread merchant acceptance could help Pi secure its place in the financial system, providing users with a borderless, censorship-resistant, and accessible digital currency. The ability to transact freely without reliance on centralized institutions could make Pi an attractive option for those seeking financial sovereignty in the face of growing regulatory oversight. Realistic Pi Network price predictions and timeline. Let's talk about what everyone wants to know. How much could Pi be worth? Short term, 2024-2025. With Pi Network's mainnet fully launched and potential banking interest, we could see Pi valued between $5-50 per coin. This price range will largely depend on how quickly Pi Network enables transactions in real-world usage. If Pi can establish itself in the digital payment space and gain traction with both users and merchants, its price could experience steady growth. Mid-term, 2026-2028. If large financial institutions and businesses start to integrate Pi into their payment systems and services, its price could rise to between $60-80 per coin. Achieving this would require Pi to build a strong user base, secure merchant adoption, and navigate the evolving regulatory landscape for cryptocurrencies. A clear path toward crypto regulations and institutional acceptance would be critical to Pi's growth during this period. Long-term, 2030+. If Pi becomes a widely accepted global currency and competes with major cryptocurrencies like Bitcoin and Ethereum, its price could soar to $300+ per coin. However, reaching this level would require Pi Network to build a robust ecosystem, secure regulatory approvals, and maintain user trust over the long haul. Achieving widespread adoption and overcoming the challenges of competition and regulation will be key to Pi's success in the long term. Final thoughts. Is this the start of Pi's financial revolution? Bank of America's move towards cryptocurrency payments is a sign that traditional finance is evolving. While it's still early to say whether Pi Network will be directly integrated into banking systems, one thing is clear: crypto adoption is accelerating, and Pi Network is in a prime position to benefit. But remember, real value comes from utility and adoption. Pi Network must prove its real-world usability for these price predictions to become a reality. What do you think? Will Bank of America's crypto move push Pi Network to the next level? Drop your thoughts in the comments and type Pi to the moon if you believe in Pi's future. Make sure to like, subscribe, and share this video to spread the word about Pi Network's potential.